What's going on, everybody? TJ here with Trading Strategy Guides, and in this video I'm going to be showing you the trend following strategy. This is based on our trend following strategy guide, and it uses the Ichimoku indicator to find signals. So let's go ahead and take a look at how, first of all, how the Ichimoku works, and second of all, how to find trades using the Ichimoku. So the first thing that I want to do is take off this line here, this greenish line. Can't really tell what color it is from here, um, but it's called the Chiku span, and it's a lagging indicator. And for our strategy, we don't really, it's not super important, so I just hide it and make it disappear because the Ichimoku is already a pretty noisy indicator, so having that Chiku span off helps see things a little more clearly. Okay, so what we're seeing here is we've got these two lines, a red line and a blue line, and then we have, this is called the cloud. This is the Kumo cloud. So this is kind of, I would say it's kind of a neutral zone. It kind of represents support and resistance, kind of. And essentially, when the price is trading above the cloud, you're going to be taking trades or taking long trades. And then when it's trading below the cloud, you take short trades. So it's pretty easy to understand that. Then you have the Kijun-sen, which is this blue line, and it's kind of like a baseline. And this red line is the Tenkan-san, and it is kind of a trigger or an action indicator. So when the red line crosses the blue, then that's when we can kind of take action on our trades. So you can start to see trends and get in and out of trades based on the trends that you see. So what we can do is, the first step is just to kind of draw a trend line. So if we were like looking back in history a little bit, we draw a trend line at this point, and we can see that we're starting, we hit a support here, and then price bounced, and then hit another support, and then bounced again. So as long as we've got two points of support, we can draw a trend line. And then we're waiting for, we're not going to do anything until we get a cross above the cloud, and then we're looking for a cross of the two lines, the Kijun-sen and the Tenkan-sen. So if we look here, we can see that we have a cross right here. So if we would technically have gone long, I think it would have been at the end of this candle. So then we would have got in at the end of this candle here. So this is where we would have taken our trade. I'll draw a trend line just to see. Now, as far as take profit and stop loss is concerned, with our stop loss, a lot of times you'll want to use maybe your support and resistance. With this here, it was pretty far away, unless maybe if you drew your trend line a little differently, maybe you saw this trend here like that. Let's delete that. Then maybe you would put it down here. But I would maybe do it just below the cloud as a stop loss. So if you'd entered here, it'd have been maybe a 70 pip stop loss, and then you're looking at, potential 115 pip gain. And then your stop loss, you could choose to close out your trade. You could set a stop loss, a set amount of pips. Say you wanted to make 100 pips on the trade, so you could set your stop loss there. You could wait until the price crossed below the Tenkan-sen right here, and then exit out. You could also use ATR if you're familiar with ATR. I will just throw it up on here real quick. ATR is the average price movement for every, we use the 14 period, so every 14, it's the average for every 14 candles price movement. So that gives you an idea of what kind of volatility the price is having. So if we had got in on this candle here, we would have been at an ATR of about 51. So you could set your stop loss at, we like to do 1.5 ATR. So 51 times 1.5 would be roughly about 75 or 76 pips, which actually would be just below the cloud. So, and then you can do the same thing with your take profit as well. You could say I want a 1-to-1 risk to reward. So maybe you're looking for a 75 pip profit on that trade as well. So you could do that. That would be a definitely a good way to do it as well. So there's a few ways to set your take profit and stop loss. Whatever you choose is essentially up to you. I would say it doesn't necessarily matter too much as long as you stay consistent. Oh, one other way you could use your stop loss is to look at a different time frame. So let's go ahead, and I'm just going to draw a vertical line on this candle here. And if we go to a 1-hour chart, we can see this was the candle, and oops, we can zoom in a bit, and you see this is where the lines actually crossed. They kind of actually just blended together here. So you could have you could choose, whether you wanted a clean cross, which actually was quite a while before it actually took in this particular trade, or wait until they meet each other like this. If they're touching like that, then that's not really a good sign. So you could just say I'm going to get out at this candle. So in which case you would have taken this trade. I believe it was, let me go back to our 4-hour chart. Oh no, this was our trade here. I'm going to just move it. So this is where we entered. This is where, and I'll just look at our 1-hour chart. So we could have exited out here, and you get, in this trade, you would have got 60 pips. So it would have been about a 1-to-1 risk to reward. If that's, if that's the way you want to do that stop loss using a different chart. Sometimes you get the signal a little bit earlier on a 1-hour chart. We do recommend, for your entry signals to, stick with a day or a 4-hour chart, just because the signals are more accurate. You're going to get less false signals. And but if you want to get out earlier and get, you might get out prematurely, but you'll definitely get better take profits earlier and take less, lose less of your profits if you are using the 1 hour chart for your exit strategy. So that's one way to do it as well. So there's a lot of ways you can do it. Um, you just have to decide for yourself what your best strategy is. And you can always refer to the guide. There's some different stuff in the guide as well that will that can help you out with your trading with this strategy. So that's really all there is to this strategy. It's pretty simple. You just find your uptrend or downtrend, draw a trend line, wait for price to cross above the cloud, and for the red line to cross above or below the blue line, depending on your direction. And then you enter the trade and just determine your stop loss and take profit based on um, one of the many strategies for money management that you decide is best for your strategy. So that's all I've got for now, and stay tuned for other videos in the trend strategy series. And thank you for watching and happy trading.
All right, guys, how's it going? This is Ben, and I just wanted to share real quick. Hopefully, you enjoyed that content, you enjoyed that strategy. That strategy is really good, and TJ did a really good job of explaining all the rules and how it works and everything like that. So, if you're interested in more, if that just that just really excited you, and you want to know more, you want to have more strategy, you want to know, get the book on that strategy that you just learned here, a PDF guide, and other strategies, go ahead and there's a just link in the description below this video. It's the first link. Go ahead and click that link, and then you're going to come on this page right here. And so you're going to come here, and this is actually our offer, the Ichimoku Ninjas, we call it. And so you're becoming ninja after you go through our content and ebooks and stuff like that. But that's kind of what we called it. And what it is we got 5 hours of videos and just content that you'll just consume, uh, stuff that'll show you how to use money management, how to build a winning mindset with Ichimoku, the different indicators. Find it on MetaTrader, find it on on TradingView, and I think we'll eventually probably give everybody who gets this. I don't want to promise this, but a custom Ichimoku indicator with some of these strategies. We got some exciting things in the making with this, but that'll be for later. And just everything like that. So you're going to land on this page. Go ahead, see if this is offers for you. The strategy you just learned, that's just one strategy. That's just one little piece of this entire course, of this entire series. And so we wanted just to kind of let you guys see for yourself what the strategies are, and that's just one of them. And so hopefully you enjoyed that. Trade it, learn it. But we do have an ebook for it, so that'll actually be included in the course here in the inside, everything inside here. So if you're interested, go ahead, and it's first link in the description. Go ahead and click that, and you'll come to this page again, and you'll see our offer. We'll probably have a special price. We'll change it here and there, but uh, whatever price is, it's not going to be anything that's going to be, thousands and thousands of dollars. We never charge that. Right now, we actually have it for $49. So that's actually on sale right now, but it probably won't stay at $49 for much longer. So if you are interested, go ahead and click on the link. Check this out. See if it's for you. If you have any questions for us, leave a comment. We are support agents. Monitor this chat. Monitor these comments. And so they'll be able to get back with you if you have any specific questions on this course. I myself could even get back with you as well. But I just wanted to jump in here, and I just wanted to see if you guys would be interested in this offer. And so again, the link is in the description, and hopefully we'll see you inside the members area and learning all these different strategies that we are offering today. All right, thanks very much, guys.